Welcome back, everyone. This last session of the day. Uh, there's a special panel on China's technological advances and potential areas of future trade restrictive measures. Theme we have been exploring since yesterday. I've been part of several editions of AICCS earlier, but I must say that 18th AICCS is taking its special theme very seriously, and that's how it should be. In fact, there was a session on the theme of the special theme. In our panel, we have very strong cast led by convener himself, Venkat, as speaker, which means that he will not be able to step in and apply the guillotine. He will speak on the theme of China's disruption of tech value chains. Then we have Dr. Pranay Kotasthane of Takshila Institution. Pranay, he follows technology space in China very, very closely, and I follow his writings very closely. He'll be speaking on foundational factors behind China's tech trajectory. And we have Dr. Antara Ghoshal Singh of ORF. Now, Antara's strong suit is meticulous tracking of Chinese language media, especially what appears in mainland China and what it has to say about India, about issues of interest to us. And not surprisingly, she'll speak on Chinese domestic discourse on geopolitics of technology. Now, we have been discussing some of these themes since yesterday. In fact, in my remarks at the inaugural session, I also dwelt on some aspects of China's innovation story, how impressive it has been, and yet kind of limitations it suffers from. We discussed a term which has appeared again and again, tech obsession of Xi Jinping, and how China is poised to dominate future industries. And this is one aspect perhaps we can explore a little bit more here. This whole talk about China Shock 2.0, China Shock 1.0 being what happened soon after China joined WTO, and the way it dominated traditional labor-intensive industry and global marketplace for those products. Now that is being replicated with China's ascendancy in high-tech, green and strategic industries, what they call three new, solar panels, electric vehicles, lithium-ion batteries, but it's not limited to that. Next wave is going to be AI applications because they are putting in a lot of resources there. So they are flooding global markets, and frankly, both developed countries and emerging market economies like India, we are struggling to see how China doesn't sort of suck oxygen out of the system. So this is for developed economies, it's a strategic erosion in sectors they had dominated or expected to dominate. So all this talk about resilient supply chain, but on the other hand, views in developing countries more ambivalent because green energy transition is facilitated by the fact that China is offering these products at extremely competitive prices. What we are achieving in in solar sector or wind energy wouldn't have been possible. Yet, creating domestic capabilities is becoming very challenging. So pushback is intensifying, and how it shapes up, we'll be discussing that. I will not take too much of time here. Let me just repeat the format we have been following. Three speakers will get about 10 minutes each. I think there is someone has a bell, so please go ahead and troll them. Then we'll have a sort of moderated conversation. I'll be posing just one question to each of them, and we'd like to keep enough time for the questions from audience, because this has been one comment, one rather sort of criticism, I'll not say criticism, but complaint that sometimes there's not enough time for Q&A from audience. So Venkat, we'll start with you. So over to you.
Good evening, everyone. I thank Ambassador Ashok Kantha for suggesting that I also be a part of this panel. This panel's idea was, totally his brainchild, and he also took the initiative of not only conceptualizing this whole panel, but also suggesting that who all should be the panelists. So I am one of those guys whom he thought that I can do some justice, but let's see how far I can live up to the task. Fortunately, Chinese government has made it a bit easy for me, because this 9th of October, they have come up with this major initiative or policy of strangling the rest of the world when it comes to export of rare earth elements and rare earth materials. Well, China did it first time in 2010 during a dispute with Japan. And again, this year, May and June, China did restrict certain exports to Western firms as a result of the tariffs imposed by Clinton administration, by the Trump administration. But, it was in 1992, let me go back to history a bit. It was in 1992 that Deng Xiaoping first announced the country's desire to turn rare earths into what he called, quote-unquote, oil of China. In fact, till late 20th century, it was United States which was leading when it comes to production of rare earth materials. In the mid-1990s, due to the deregulation of global trade that led to permissive investment screening, a tolerance of offshoring, the U.S. Committee for Investment in U.S. under Clinton administration approved GM's sales of a firm called Magna Quench, which used to manufacture magnets. It was an Indiana-based firm that manufactured rare earth magnets used in computer hard drives, jet guidance systems and it was whole. This Magna Quench was sold to Chinese owners with close ties to Beijing. Allegedly, one of the owners happened to be son-in-law of Deng Xiaoping. That's the grapevine that time. And later it was revealed by one of the American policymakers that these magnets had a dual use, and they were also useful for cruise missile technology. And when the Indiana firm was sold to these Chinese owners, the condition was that the firm would continue to operate in Indiana. But strangely, after a few years, the Indiana firm was shut down and all the equipment of Magna Quench was exported to China. And then the George Bush Jr. administration came. A section of them was perhaps very busy basking in the glory of making initiatives to socialize China into the international liberal order. And another major section was so much sucked into this great war on terror that China, managed to do things in its own way, and it has become the giant that it is today when it comes to the rare earth materials. So China dominates rare earth, materials. 90% of the world's supply chain is, in the hands of China in terms of production, refining, and exporting. More than 90% of magnet manufacturing is in, again, hands of China. Now, this month, October 9, 2025, as many of you know, the China's Ministry of Commerce added 5 rare earth elements to its control list on top of 7 that's already there on the list in April. The newly added materials have military applications such as laser technology. Laser technology is to a significant extent comprises of an element called europium, which is again used in TV and smartphone screens. The ministry said that various types of rare earth productions and processing equipments will now be subjected to export controls, and they are going to discuss and deliberate on various other matters, equipment materials like high density lithium ion batteries, cathode and anode materials which are used to make them. So a number of new rules have been unveiled, prohibiting unauthorized export of technology related to rare earth mining, processing and magnet manufacturing. One of the interesting requirements is anyone making product overseas with certain Chinese inputs will also need to apply for an export license to sell them to a third country. This is quite similar to the CHIPS Act, where the Biden administration came up with this CHIPS Act, and they said that applied the point of origin rule by saying that if ASML has to, a firm like ASML, if it has to export chip making equipment, the hardware, to China, then it can do only on the condition that 100% of its equipment has to be non-US components. Even if you have an iota of American component in whatever ASML is doing, then it needs to take a license from the Department of Commerce in the United States. So this is also somewhat similar to that. CHIPS Act also said that if an American is working for a Chinese semiconductor firm or chip making firm, then he needs to take the permission of the Department of Commerce. So the chips, this new rare earth, kind of a ban that has come about with China weaponizing its strengths to strangle rest of the world, just like Americans have used to strangle China, choke China with supply of chips to hurt the semiconductor industry. But the steps taken by United States, 3-4 years back, it hit Huawei initially big time, but Huawei has recovered. That's the nature of the beast. That Huawei, encouraged by state and investment and R&D, it has been able to make up to a certain extent, whereby it has launched certain advanced 5G model mobile phones with more or less zero presence of American chips. But if the Chinese are successful in implementing, whatever they are doing in the case of rare earth, it's not going to be easy for the Americans, or for that matter, the rest of the world, to make up for that in a very short span of time. So the American policymakers did realize that they are going to have a tough time. They realized that the Chinese are going to perhaps weaponize in the future. So 2012, they have reopened their facility. One particular facility where this rare earth material mining and all that was being done. This is in a place called Mountain Pass in California. It was opened in 1952, but environmental standards, lower productivity, lack of support for industrial policy in the United States, all these things led to its closure in 2002. But once they have opened it up in 2012, the United States doesn't have the domestic refining capacity, and now it was forced to compel to ship their raw materials to China for processing. And now the story is that China has completely leveraged the critical minerals and it has used this particular expertise of which it has developed by after so much of investment. It has used it in a very shrewd manner, as it has done in other cases, by spending a lot and subsidizing certain firms. So to complete state control of production and extraction, cheap loans, export limits to, having policies which limit exports to bring majority of the world's critical mineral industry under its domination. So that's where we stand when it comes to China's disruption of this rare earth elements and rare earth materials. So I don't know how much time I have, but maybe I would like to respond to some of the questions that might be raised. But for now, I would stop here.
Thanks, Venkat, for setting the ball rolling. I'm sure there are a lot of questions we'll have to respond to later. Now I'll request Pranay to make his presentation.
Wansheng Hao, don't correct my Mandarin tones, please. First, a disclaimer that this is a technology policy analyst view of China, what China is doing on tech, rather than a sinologist's view on technology. So please pardon, and I'll be very happy to update some of the priors, given that China experts are all here. Okay, so let me talk about what, there are three main arguments that I want to make, and I'll say them right up front. One, that China's tech success rests on several foundational factors and which are aided by specific policy instruments. Okay? So one can't exist without the other. So we'll talk about what those foundational factors are. Second, some of these foundational factors are at a severe risk of being declining over the last few years, and I'll explain why that is the case. And that's why I say a linear projection of China's tech successes over the next decade, based on what it has done in this decade, is a wrong model, and I'll explain why. And third, I would like to disagree with Venkat here. I think China's tech restrictions, which have come up, they come from a position of weakness and not strength, and I'll explain why. I think only one country can make China plus one a reality, and that country is China, and it is doing so. Now let me explain what on the foundational factors first. So is China an innovation powerhouse? We've discussed a lot of those, but I'll just give a few stats. So 10th in the Global Innovation Index in 2025. It's not the top 5, but 10th is a respectable number. It's the only middle income country in the top 30. So that's a significant achievement. Highest number of S&T clusters, and as Professor Ramakrishna mentioned in the morning, it is still dependent on many materials still. So semiconductors, software, industrial ball bearings which are used in windmills, etc., they are also dependent on it from German players. So a lot of those dependencies don't get mentioned in the case of China as they get mentioned in the case of US or other countries, but these are global supply chains. No one country is Atmanirbhar. Now, the second point, how did China get here, right? So what are the three common explanations which are given? So the three common explanations we often hear is forced technology transfer, the trade markets for technology. That did play a role, but I mean all countries try to do that. The real element is you also need to have the capacity to absorb those technologies, right? And that is something which needs to be developed. It's not like a file that you can copy and then that file you can reuse. You need to have that absorptive capability. So that doesn't explain everything. Industrial espionage and theft is the second explanation. It has played a role, but it can't explain successes across many of the sectors. And third is state-run firms. Again, most successes actually on innovation have come out of non-state firms, even if they have been backed by government financing. So Huawei, Moonshot, AI, DeepSeek, or many of such examples here. So then what are the real factors, right? What are the foundational factors? In my view, based on analyzing technology ecosystems of many countries, I think the three foundational factors that work in China's favor are: one, high investment in capabilities and infrastructure, and high educational attainment has been a really big factor that we often underplay. In fact, there is a great paper by Nitin Bharti and all, which has looked at a century of education policies in India and China, and they find that even before the communist period, China invested a lot in primary education, then secondary and tertiary, and that built the foundations of a lot of things that happened later. Second is reforms in the S&T ecosystem. So earlier, like India, China also had this elite R&D institutions which were walled off from universities, but that changed and a lot of focus has happened on university research, which is a big change. And if you look at the R&D figures, even though the gross expenditure on R&D is consistently over 2%, 70% of it is business R&D, not government R&D. Right? So that is another important factor which has happened over time. The second foundational factor is state focus and local level experimentation. I think this, so bureaucratic decentralization is Venkat's PhD topic, I got to know, is actually also one key factor, because different cities experimented with different things, right? And that was an important factor in trying to get, so the direction came from top, like Thai Ming Chung's SAMI model, selective authoritarian mobilization innovation, but even though the direction was top, there was enough flexibility for many bureaucratic state level actors to try different things, and a lot of investment has actually come from those entities, not the central government. For example, the MG Motors brand that we see is wholly owned by a fund of the Shanghai government. The second one is intensive competition, and we know that even in telecom, for example, it's Huawei's success we know, but there was intense competition between various kinds of firms. There were JVs, there was Datang, there was a lot of state-owned firms, all of them competing. That was an important thing. The third important foundational factor is global connections. So movement of talent back and forth from other countries is well known, but informal social networks play a big role in the science tech ecosystem. Right? And this is not just true of China. In the case of Taiwan, in the case of Israel, also they have played an important role. And there's a lot of study about how Chinese American researchers do an order of magnitude higher research collaborating with Chinese researchers back home than, say, Indian Americans doing research with Indian. So these kinds of things are important. And of course, all this happened because there was favorable geopolitics. Right? That was the underlying tissue for all this. Now, on this layer of foundational factors, there was many specific government policies that we all have heard about. There are seed investment, government guidance fund, there are spin-offs which happened, there are stealing, like legal, illegal, quasi-legal methods were used. So all those, I think, played a cameo role, but they can't explain a lot of the things that are happening through the foundational factors. So this is how my explanation would be for what China has been able to achieve or not achieve. Now, what has happened in the last decade? Right? So my argument is that many of these foundational factors have declined and are not the same as they were until now. Now let me explain why. Number one, more centralized control. So as I said, the bureaucratic decentralization idea, that has now changed to this desire for self-sufficiency. That is leading local governments to do the same things that many other local governments are trying without the market-based comparative advantage idea that played to some extent earlier. So you're seeing a lot of, every province wants a fab, and all those fabs, you can build them up, but fab finally will be profitable once you have enough demand for it, right? And that is really something which is, you will see a lot of money going into the same projects which many other cities are also trying. Second related point is that there is enough data on this as well. So let me just give that firms producing chips and electric vehicles, for example, firms that are producing chips for electric vehicles are 30% costlier. Those chips cost 30% costlier. So there's no cost advantage like it was in the case of many other equipment. And yet they are doing that because that's a directive. So this is something to keep in mind. Third is that CPC has always been wary of alternative power structures, and we know of the restrictions that happened on Chinese companies in the private sector, and that leads to reconsideration of the investment that you will do in the future. The second big change that has happened is change geopolitical perceptions, right? The West or many other countries are not going to allow what China did to it until now, right? So China has also used its SAMR, the state administration for market regulation, oftentimes, and that is causing pushback in other countries as well. There are negative perceptions due to export controls, and in fact, things like in the Chips and Science Act, there is a clear directive that universities in the US which have Confucius institutes won't be eligible for that funding. Right? Those are kinds of examples which indicate that the world is not going to be as benign to China as it was until now. The third important point is private sector concerns itself. There is the Economist data suggests that there's 30% of industrial firms who are loss-making by June 2024. That's the highest number since the Asian financial crisis of 1998. Right? So these do have real consequences. And finally, local government fiscal stress also will have an impact on the technological investments that can be done. So based on these kinds of factors, my assessment is that these escalating geopolitical tensions always lead to something that politics of innovation literature calls as creative insecurity. So you always try to get some things around, try to innovate. So you will see some creative insecurity in the short term. In fact, that's what we are seeing now. But it doesn't mean that you can linearly project that into the future. So my contention is, and it is open for debate, that it's not to say that China will suddenly decline on the tech side or submit to external pressures, but I see that it won't be able to do a lot of things that the West still holds power on. Okay. So this is the contention. Now, since I have 1 minute, I will also address quickly on the restrictions that China has brought in, just to address that. I think they are significantly different from what restrictions like ASML, etc. would have. In terms, in the mechanics, they are similar, but in terms of impact, they are very different because it's very difficult to make an alternate EUV machine, but it's not that difficult to do things on the rare earths. Let me give some numbers, right? So, and these are cards which you once play, you extinguish the value, right? So others will try to find. Give me some stats. Total US market for rare earths last year was $170 million. That's the size of their avocado market, right? That's all. Then if you see in a particular EV, two-wheeler EV, for example, Ather's CEO is on record saying that the amount of rare earth required in an Ather EV, one EV of 70,000 is around 200 rupees. That's all. So even if that price increases 2x, 3x, 4x, they can do an alternate production, right? Mining will take time, but you can do many other substitutions. So there are substitutions on process to material side. There are substitutions which can happen system to system side. For example, Tesla has been experimenting with induction motors. Toyota and European suppliers have also reduced the number of half the heavy rare earths are replaced with lanthanum and cerium, which are more abundant, right? So these kinds of things are going to happen, and because of these restrictions, China has made clear that this will happen in the future, and many other countries will do. So the biggest innovation will not come by you building a rare earth industry, that will happen over time, but you finding other substitutes which will either reduce the amount of rare earth consumption or use alternative motors, alternative magnets, and already people are two-wheelers, etc. are talking about it. And finally, the point is that if just like what DeepSeek could do, there are similar things can happen in the rest of the world as well, especially in something like rare earths. If you see the export controls, they're so broad. That suggests to me that they haven't found a precise instrument like EUV. You have restricted just one kind of machine. It's very broad. Things, everything from metal smelting to diamond wire cutters are there in it, which to me indicates that they are experimenting with this and seeing where it goes. And to me, that indicates weakness rather than strength. So this is my overall assessment, that there will be creative insecurity is leading to some innovations, but I wouldn't project that into the future because the winds that benefited China thus far have changed significantly. Thank you.
Thanks, Pranay. I think that's a very important observation you made, that winds that benefited China in the past, those winds have changed. So the future trajectory of China's high-tech quest might be more challenging. Well, now we move to Antara.
Good evening, everyone. Thank you for having me here today. It's an honor to be a part of this important panel discussion. Also, I would like to highlight that this is my first time at AICCS, so it's a very special occasion to me. I hope my research findings will add value to the conversations that has been happening since the last 2 days at this prestigious platform, and which I believe also plays a very important role in shaping India's China discourse. So before I start my presentation, just a brief background to the kind of work I do. Ambassador Sir has already mentioned about it, but just briefly, I generally look at I do discourse analysis by scanning Chinese media, Chinese think tank publications, scholarly works, and so on and so forth. And then I try to understand the broader public sentiment in China, or the mood in China, how China is thinking on various geopolitical or geoeconomic issues, which is policy relevance to India. What I would like to do in the next 8 to 10 minutes is to give you a glimpse into the current economic debate happening in China, within China's scholarly community, and how technology figures into it. So if you look at it, if you look at the Chinese media or Chinese social media these days, you cannot miss but see the triumphant tone that has been there lately. Many seem to believe that China is very much on its way to win the trade war against the United States. It is now escalating, retaliating, experimenting with extraterritorial trade rules, with much greater effectiveness. In other words, it is giving back to the Trump administration in terms that they understand. And behind this growing confidence of China is the strength of Made in China. Chinese exports have maintained good momentum despite the disruptions caused by the Trump tariff. China's exports grew by 7% in 2025 till September. Again, much has been written about China's massive trade surplus. Even after losing much of the US market, China's enormous global trade surplus remained unshakable. In the first 8 months of 2025, China's trade surplus in goods reached about 785 billion and is expected to exceed 1.2 trillion for the entire year. China's manufacturing now accounts for nearly 30% of the global total, and its overall scale has remained world's largest for 15 consecutive years. Make in China or Made in China has actually become the economic foundation of various countries, particularly developing countries, including India. So no doubt China has many reasons to celebrate. But then the celebration is often cut short by China's mounting concerns elsewhere, and that is its domestic economy. It is important to note that although China's manufacturing exports are performing very well globally, it remains well positioned to handle the trade barriers which has been imposed by the United States and other countries. Its trade surplus has continued to grow, and its GDP growth is also quite okay. 5% is quite okay. But the problem that the Chinese side see is that Chinese manufacturing has not been able to add the economic vitality in China's domestic economy. There is a growing consensus within China that Chinese economy is currently facing a situation never seen in the past 40 years. That the Chinese economy never truly emerged from the pandemic. And why are they saying so? because the PPI, or the Producer Price Index, has remained negative for 3 consecutive years, declining every month. 3 years of negative PPI and more than 2 years of near zero CPI, or the Consumer Price Index. It indicates a slump unprecedented in China's 4 decades of economic development. Then there is this continuous decline in prices and pressure on corporate profits, resulting in serious involution in various key sectors of Chinese economy. Coupled with this downturn, coupled with the involution factor, there is downturn in real estate prices that began in 2021, and consumption hasn't really taken off. Then, there are factors like for FDI declining, there is risk of industrial chains moving abroad, market costs are rising, and consumption has been diminishing. And as a result of all these factors, there has been pressure building up on China's employment space. Now, the key question doing round in Chinese strategic circles is why China's consumption isn't picking up despite the high-level government intervention. In case of most developing countries, when per capita GDP reaches around 13,000 to 14,000 USD, the export-driven effect is expected to weaken, and consumption becomes the driving force of the economy. However, that is not happening in China's case. Although its per capita GDP has already reached $13,000 to $14,000, most of the highways and airports that needed to be built has been built, but consumption isn't picking up. It has still not become, the 70 or 80% of Chinese GDP. It's still lagging behind. So one explanation that is also fast gaining currency within Chinese strategic circles is that Chinese government's techno-nationalism, or particularly single-minded focus on strengthening independent innovation, it has been somewhat counterproductive. It is being argued that the Chinese government has somehow pitted the development of hard technology and innovation in opposition to developing consumption, finance, and real estate. As if somebody who engages in consumption or real estate, he is hindering innovation, and that China will lose competition against the United States. But now it is being argued that, China already has a lot of technology and it is quite cutting edge, but still it is facing a lot of trouble in its domestic economy. So, which means that China cannot escape its current predicament by simply overcoming technological bottlenecks and establishing an independent domestic industrial chain. Chinese economists agree that without sufficient domestic demand, its strength in technology is proving counterproductive or meaningless. On the contrary, they say that without sufficient domestic demand, the stronger China is getting in terms of manufacturing, in terms of military, in terms of technology, the more severe the domestic economic crisis it is facing. They caution that before the Second World War, the United States held a 40% global manufacturing share, which is still higher than China's current 30%. And yet it suffered a depression unprecedented in human history. And many of Chinese scholars believe that somewhat of that trend is happening in China's case as well. The second criticism put forward by many Chinese economists is that when it comes to boosting consumption, the Chinese government's policies so far are focusing too much on measures like subsidies and tax cuts, cash handouts, stabilizing employment, and so on and so forth, And they believe that the government is trying to avoid structural issues like something like the real estate issue. For example, it is argued that if real estate prices continue to decline, overall demand in the market will stagnate. Local governments lacking revenue will be reluctant to spend or invest, making it very difficult for the domestic demand to pick up. From that perspective, many Chinese scholars are of the opinion that de-risking or deflating the real estate bubble a few years back was actually a mistake. that the government went overboard and one size fits all kind of crackdown on the real estate market. It has hit the middle class in China, and that is one of the reasons why domestic demand has been unable to pick up. They want the government to relook at its long-held stance regarding debt expansion, particularly treating real estate as a taboo, or obsessing over real economy, that is strong technology, strong production, and strong military, and shying away from expanding debt, referring to Japan's case, that Japan has lost 3 decades because of its excessive debt expansion. So this group of economists, their core proposition is that the government must stop strengthening the supply side during this period of shrinking demand, which will create more and more oversupply and drag down the economy. Instead, it should focus on finance, not manufacturing. Explore options like boosting the stock market, stabilizing housing prices, and stabilizing local government debt, or all those measures that can create money, expand domestic demand without accumulating excess capacity. In other words, rather than competing head-on with the other exporting countries where the US is trying to shift their supply chains, China, they say, needs to change the battlefield and compete with the US directly for the title of global client by forcefully expanding its own debt. That the US's current global dominance isn't due to its vast manufacturing capabilities, but rather its monopoly on the global debt. So China should also emulate this kind of a system. And yes, there have been also, such discussions, these kind of discussions which talks about a 180-degree policy reversal.
We'll have to
Yes, just 1 minute, I'm just finishing off. Or a course correction by Chinese prominent economists. It is creating a lot of confusion within common Chinese citizens. And overall, there have been, a lot of confusion about where Chinese domestic economy is headed, and a lot of, losing confidence on how China's domestic economy is going to fare in days to come. In India, we must take a greater effort to understand the transition that is underway in the world's second largest economy. We need to be careful neither to blindly accept the China is winning narrative, nor to underestimate the resilience of the Chinese economy or the efficiency or the quick turnaround factor in the Chinese system. So I'll stop there, and thank you very much.
Thank you, Antara, for in a way showing mirror to some of the very critical domestic discourse that is taking place in China. In fact, this is something people don't quite readily appreciate, that diversity of voices which emanate from China, not just in social media, but in formal academic discussions. This is in India, and more so in West, they think that that kind of diversity is suppressed, which is not the case really. Well, now what we'll do is we have